Hi everyone, this is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If this is your first experience with TradeFinder, welcome to you. For those of you that have been with us over the months, welcome to you as well. If you've seen any of our recordings, you know we have to do this disclosure/disclaimer. It is important, so please take a screenshot of it, read it in detail at your leisure if it's your first time seeing it. But a couple of things that the powers that be want us to make sure you're aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. And that's because we have a lot of international viewers and a lot of international subscribers. And so we just want to make sure that all the pricing that you're aware of is in US dollars. So the way TradeFinder works is we'll do a market update, talk about where the market is, and we'll do a few other markets that viewers have asked about. So we'll cover more than just the US market. We'll talk about some of our recent case study considerations from TradeFinder. We'll go over any Elliott option alerts that we may have had for our alert subscribers, give you an idea of how that works. Then we'll look for a current case study consideration for this week's TradeFinder. And with whatever time is left at the end, we'll go ahead and do a general Q&A. Normally that amounts to you guys giving us some of your favorite stock symbols, and we take a look at what our technical indicators may say about your favorite symbols. That's it. That's pretty much how this whole TradeFinder works. And you can certainly ask questions within the question and answer box provided for you with your connection. So let's go ahead and take a look at where the market is. You can see we did move to the downside today. I think today was a pretty interesting day in the market. I say that a lot. I mean, I find most every day interesting, but we had this jump up in the market here on the 7th of October that basically came up and closed this gap here. And a couple of people on YouTube said, well, based on my charts, it missed it by 30 cents. Okay, fair enough. We didn't fully and completely close that gap. But please understand that things aren't always exactly perfect in the markets. They get pretty close, and quite often fib levels, I've talked about this before, actually get touched, but not always. Sometimes we just get very close. And then in yesterday's trade, we came down and we filled this lower gap right here, and that erased the potential for an island reversal, where we could have had this gap down and gap up with these few bars just kind of floating off on their own, and a potential move back to the upside that left some doubt as far as what was going to happen in today's trade. But we did trade lower on the day, so it doesn't look like an island reversal is in play. You always want to look at volume and see how that played out. And that was another thing we talked about in yesterday's trade. We were kind of below average volume, and we got back up to average volume today. So it does look like that island reversal scenario back to the upside is not in play. Now we have two zigzag patterns in play to the downside. Both of these are qualified. So we have this pattern here, which is a qualified zigzag down to the 420 level. We talked about that on the way up. 420 was a level on the way up. That gives it added potential as far as a move back to the downside. So the percentages are higher that we go back to a level that was resistance on the way up, or a target on the way up, as far as a target on the way back to the downside. But we also now have a larger zigzag that's also qualified, and that brings us down to 100% extension down into around 414. And you can see that there is some support resistance in various levels through here. That could be a potential. And then we have this gap here all the way down at the 400 level, that perhaps we start to see some extensions on these zigzags, 161.8% extensions that could carry the market down and close that gap all the way down at 400. Do we make it down that far? We'll have to wait and see. Those are both extended levels. So I want to make sure I'm clear on this, that both of these zigzags could become fully complete without ever getting back down and filling that gap. It would take an extension of the zigzags, of the C wave of the zigzags, to get down and close that level. So they could both be fully satisfied at about 414 and leave that gap still unfulfilled. But at some point in time, we are going to fill that gap. At least, 94% of gaps get filled. Somebody actually did a study on that when I'm always talking about gaps get filled. So somebody went out and did a study on it, and it came back that 94% of gaps actually get filled. That's pretty close to 100%. It's about as close as you're ever going to get in the world of trading for something to be like this is going to happen. So that kind of is about as much as we can say on the market itself. We did have a SPY update on YouTube. For those of you live streaming on YouTube, welcome to you. And if you haven't checked out our channel, please do so and go through and look at the videos that we've had. We actually went through and I showed the screen, and then I broke it down into the segments of the potential island reversal and then both of the zigzag patterns. So this is a little bit of a mess with all this stuff on the chart here. But you can see it broken down in segments on YouTube. So again, please view that if you haven't already. So let's take a look at a few other market scenarios that I know people are interested in because you ask about them all the time. So we'll go through them rather quickly. On the Qs, kind of a similar scenario, although not really ever that island reversal scenario. We did have the same gap up. That's been filled. And then we can look at couple potential zigzags here as well, right there and to the downside. And then we also have a potential zigzag all the way down to this low with this level here, giving us a potential 100% extension down around 333 on the Qs. So two different segments of zigzags on the Qs, but no ever island reversal potential. Everybody always asks about the IWM. I'm going to show it, but nothing has changed on the IWM. It's still just in the middle of no man's land, and we're kind of at the point of that triangle still. And you've heard me talk about this so many times if you watched any of these videos. We have support at 210. We have resistance at 230. It's been that way for the entire year. We do have a triangle pattern, a really nice consolidating symmetrical triangle on the IWM, right in the 220 area, right dead smack in between support and resistance. You couldn't really come up with a better scenario for some sort of a breakout of the IWM, but man, just going nowhere for the entire year. That's pretty amazing for something like the Russell and the small cap stocks. Is there no interest in them? Is there that much indecision? I would say that it's likely a combination of both would be my viewpoint, but right smack in the middle of the two is where we are. So I really can't give you any sort of a idea of where we're going there. Let's look at Bitcoin. And Bitcoin, as I talked about in that SPY update, had made a nice move to the upside, just a vertical move. But note today, and I get it, I know Bitcoin trades 24 hours, is trading right now. I fully understand all that, but we do use some sort of a point in time as a capture for end of day data so that we can chart this. And you can see that there's a bit of a doji here on the chart following this vertical move to the upside. And that's in a wave 5. We went up and hit this tap box. That's called time and price projection. And so the wave 5 is within that box. But then I ask you on the SPY update on YouTube, do you think that Bitcoin is going to make new all-time highs based on this move to the upside? The negative here is it's been pretty vertical. And so we talked about, is there a potential for some sort of consolidation? Anything that consolidates above this wave 3 high would still be considered bullish. So we go through, we hit that target within the tap box, we consolidate a bit, and then we look at moving up towards that recent all-time high and the potential for breaking it. There were some comments on YouTube as far as Well, if it's a risk on or risk off environment, and that's basically when the market's moving to the upside significantly, risk on, go for it. Looking for market to continue to move to the upside. Risk off is when you're like, oh, if anything is in any sort of a risk connotation to it, you kind of avoid those when the market looks like it may go to the downside. And so there's a lot of people that feel like Bitcoin is a risk on, risk off type of an event. So if the market's doing well, risk on, Bitcoin goes higher. If the market's not doing well, risk off, and Bitcoin goes down. Hasn't played out that way. Bitcoin has still been moving to the upside as the S&P has been moving to the downside. So I don't know that you can make that correlation with any sort of confidence. The chart pretty much speaks for itself, almost a vertical move higher. And those of you that have listened to any of my recordings know I don't like the vertical move scenario. We'll go straight up, quite often come straight back down. But as long as we stay above that previous wave 3 high, that has to be considered bullish, and the potential to move up and test those all-time highs and then potentially break those all-time highs has to be considered. I think a couple of the foreign markets that we look at, the Nifty in India, and we've talked about this for so long now. Look at that move today. Tried to break out. Look where the open was, but then closed on the lows. And the level that we've been talking about so often on the Nifty is this 49 level. As long as we stay above that, you have to stay bullish. So if you're long India, if you're long the Nifty, you are long until you break below 49 with a follow through a confirmation day. And it looked like maybe we're trying to break out. We had a little bit of a triangle here, nothing significant, but Elliott always said, pay attention to the small triangles as well. You don't have to have the big ones, look at the little ones as well. And so we had to open up here, look like, all right, maybe we're going to run, try to break that previous wave 3 high. Now settle back down near the lows. And so that doesn't count as a breakout yet. Potentially we could continue to break from here, but so far you can't call it that. And then looking at the XJO, which is for our friends down under in Australia, the ASX. And you can see that we've been talking about this really nicely formed symmetrical triangle here, following the move down of this downward zigzag. Look at the previous trade finders if you want to see more detail of this. I don't want to do the same thing every single week. So please go back and look at the previous recordings if you're new, if this is one of the first times you're viewing TradeFinder. But we do have a symmetrical triangle here towards the end of that downward zigzag. We've tried to sneak out to the upside a couple times here, and we haven't been able to do it. We haven't been able to hold it. And so we'll see if we can continue to break up from there. But so far, we're staying within the confines, I would say, of this symmetrical triangle. And we could potentially break lower as well. And we talked about this before. There's a level there that could add a little bit of support. You could make a case for drawing a line just a little bit higher. I do like this lower line a little better because there's more touches of the line. The more times you touch the line, I think the stronger the support resistance level becomes. And so I think that that's the area that you want to look at, 70.80 to 71.20, somewhere in there. And then if we can't get through that, then we're going to come all the way down and start looking at the big round number around 7,000. So basically call it an awful lot of support on the XJO, the ASX 200 in Australia between 7,000 and 7,100. So if we're going to break to the downside out of this triangle, man, it's going to have a tough time. So we can come down and bounce and bounce and bounce. I just don't think we break to the downside out of this triangle and have one of those vertical breakout moves. This could be one of those moves that breaks possibly in a zigzag pattern where you come down, break up, and then come down lower again. That would actually make sense. I've said this numerous times as well, that the market doesn't always do what makes sense. But the symmetrical triangle is still in play, in my opinion, and the fact the XJO ASX 200 could go in either direction from here. The SMH, I brought that up in the YouTube SPY updates. because I had mentioned that that was one of the better looking charts, like the Nifty is one of the better looking global markets. The SMH was one of the better looking indexes, if you will, within the US market. We broke that upper trend line and gapped up and have come down and filled that gap. Now we're here testing these lows, and there is a bit of support there at 250. If we break that level, then it's just kind of stages on the way down here as well, just like the XJO would be. If we broke to the downside, a little bit of support there at 240. There's more support at 230, but the big bastion of support is all the way down here at 220. But look at that. You can see that the semiconductors will be, again, kind of a stair step lower with potential supports on the way down. Looking at the 10-day moving average, clean break of the 1030 crossover. We're below the 50-day moving average. Even the 30-day is crossing below the 50. None of that is good. None of that is bullish as far as a potential bounce to the upside. The market could reverse and move back higher. But there's a lot of technical repair that needs to be done in the charts. We highlighted the stuff that's going on in China. It's not just Evergrande. There's a couple other big property management firms in China that are in real danger of defaulting on bond payments. Evergrande missed their third bond payment. And so where's the bullishness? There's a lot of international banks, big banks, so big money involved in those property management firms in China. And if they do default, yeah, that's going to have global repercussions. And that's going to make it pretty difficult for the market itself to continue to move to the upside. So it looks like, yeah, we have to pay attention to those downward zigzags. Currently, if you're curious, the futures at this moment are down 7.5. So that's not really a big deal, but they're lower nonetheless. And so we closed on the lows yesterday. We closed near the lows today. Nothing bullish going on along those lines. I showed you the volume. We probably want to look at the CCI because that's the short-term indicator. And this is key on the CCI. Now, we done our indicator master series. We do a lot of education at Elliott Wave Options. That's really what we like to tout, is the fact that we are an educational company. We do alerts for trading ideas, but primarily we want to educate people to where they become better traders in their own right and can utilize the information that we provide for becoming better traders on their own. And look at this. We did get to the point here where we down 300 on the CCI. That's an extreme point low. You can see that the previous low was at minus 200, which is kind of in one of what we call the threshold. So we broke that, we traded back up, but we only went to 100. We started to break back down. Now, had we broken up and moved up into this level above positive 100, we could have looked for, okay, well, maybe there's a signal there that we could be looking for a move back to the upside. Didn't happen. So the fact that we just went up to 0 and started back down, that's negative as well. And then we look at the CMF, shaking money flow, that's bearish. So there's an awful lot of negatives out there. Some people are saying that there's so many negatives that that's bullish. And that's a sentiment indicator that when everything looks bad, sometimes the market goes back the other way and reverses back to the upside. Well, you could certainly make that case now that everything looks so negative and so bearish that perhaps the market defies all of the indicators and moves back to the upside. It's always a possibility. Nobody knows for sure which direction the market's going to go. We like our indicators. We trust our indicators. And right now they're showing the path of least resistance is still lower. And until that changes, that's the way we're set up. We have puts on the SPY. We have puts on the triple Qs. And we have some long positions on energy. I talked about this last week in last week's TradeFinder, so I thought I would go ahead and share that with you. We have USO. We've been in and out of USO a couple of times. That's oil. If you've been to the gas pump, you know that oil's moving higher. It doesn't feel too good to go fill up your tank, does it? We'll take a look at this chart. So we did the UNG last week, which is natural gas. So we'll do oil this week, both of them in that energy sector. So our entry was on September 30th. And take a look at this chart. Anybody that's heard me do any sort of recordings knows that I am not a fan of when markets move vertically, because what goes vertically up quite often comes vertically back down. And I'm a big fan of where the stock or the market is in relation to the 10-day moving average. When we get too far away from the 10-day moving average, we can get into overbought or oversold conditions, depending on where we're moving up or down. So we wanted to be in energy. We were in UNG, but we wanted to be in oil as well. But look, when we broke this resistance level here at 51, which was key, it broke it with a gap up. I don't like gaps either, because gaps get filled. I just told you earlier, 94% of the time, somebody did the actual numbers, gaps get filled. That's high percentage, has to be respected. And so we came back down, filled the gap, tapped the 10-day moving average. That gave us our entry point. And then we moved back to the upside, and watch what happened. Now, our plan was that, okay, we're going to ride this wave 5 higher, but it went vertically up 3 days. Boom, 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 straight up. Another gap and another vertical move to the upside. Now, we could have just held that, but what's likely to happen when you go vertically up? You're either going to come back down towards the 10-day moving average, or you're going to consolidate and let the 10-day moving average catch up. That's also in our indicator mastery series on moving averages, where we talk about the 10, the 30, the 50, and the 200-day moving averages. Those are the primary ones we look at. Again, we focus on educating our subscribers on all of these areas. But when you go up like that and you go vertically up, you're likely going to either consolidate or come back down just like it did before. So we can make 56% in 4 days. We're going to take that. And so we went ahead and closed that position out. We're in another USO position that's bullish already, or excuse me, profitable already, continuing the bullish theme. A lot of people think that oil could go to $90 or $100 a barrel. I think 90 is conservative. Seems like if we go to 90, we're likely going to go to 100. You've heard me talk about this all the time, the tractor beam effect, going back to the old Star Trek days of the tractor beam kind of just pulling things along. And by the way, Godspeed to William Shatner. I don't know if you're aware of this or not, but William Shatner is going up in the Blue Origin rocket tomorrow, scheduled to lift off at 9 a.m. Eastern time tomorrow morning. So he's literally going into space. So Captain Kirk is going into space. You gotta love that. And so again, hope everything goes really well. And just, you know, there's a lot of themes with the Star Trek stuff, and the fact that he's actually going to 90 years old, William Shatner is, and he's going into space. So hopefully that all works out well. And that's a really good feel-good story. So I just wanted to get that in there, because I'm always talking about this tractor beam effect on how the round large numbers tend to just draw stocks to them. Again, you know, the market that's moving to the upside with all of the stuff that's moving downside. So we have SPY puts, we have triple Q puts, but energy is moving higher. So we have participation to the downside, we have participation to the upside in the sectors that are moving higher. Money always moves somewhere. Man, if you're streaming on YouTube, or if you've been watching us in our SPY videos, or you've been involved in these trade finders, not a better time to become an alert subscriber than right now. I mean, we're just spot on with what's going on in the market. So love to have you as an alert subscriber. Every Thursday, we do a webinar for insiders only. It's called our insiders meeting, and that's for alert subscribers only, where we talk about our alerts. We send out alerts for entries, any adjustments, and exits. I know there's a lot of alert services out there that only give you alerts on entries, and it's up to you from that point on. We do that for free here in the TradeFinder. But as far as our alert subscribers, we give adjustments and exit alerts as well. So take a look at our website. We have a promotion right now, great promotion. If you'd like to become a subscriber, kick the tires. We only charge month by month. We don't have any commitments. You don't have any yearly commitments to this. You give it a try for a month. What do you got to lose? If it doesn't work out for you, then move on. And we all part as friends. So let's go back to the market itself, and we'll take a look at our previous case study considerations. We'll look at Align Technology. Now, this is where we were back on 8/24. Looked like we were moving back to the upside, but interest rates have been moving higher, right? Let's go ahead and take a look at that chart real quick before we get into this. Let's add in interest rates. It showed all these other markets, and you can see that we ran to the upside, and man, we showed this zigzag take a look at the SPY update. Again, those of you on YouTube, look at it. Talked about how we were right up to the 61.8% level, and that might add a little bit of resistance. Perhaps we go sideways on the interest rates for a bit, and we did. But isn't it interesting that on a day where interest rates pulled back, the market couldn't use that to rally higher? Would have expected maybe a higher close in the market today with interest rates backing off a little bit. Didn't happen. So going back to Align Technologies, it sounds like or seems like a lot of people are feeling that interest rates are not done, that they're going to go to the upside, continuing from here. So you can see this move, and then look what's happened back here. Now we have a wave forward at 48%. So we have to respect that, but look at where we are. And this is the key for the adjustments that we do at Elliott Wave Options. We're right here. If we don't hold this and trade back to the upside, we can adjust this trade to the downside. That's what we would do for our alert subscribers. We can't do that in TradeFinder, but we could do that for our alert subscribers, turn this into a bearish trade, because if we don't hold that level, we're coming all the way down here, all the way back to 500. That's 120 points to the downside. What a great bearish trade that would be. And if you were long this position, you're losing right now. But if you reverse that on the break of support here at this wave forward, the 50% correction, then you can make money on the way down. It's likely going to be a pretty quick move to the downside, because look how fast we moved from that level up to where we are now. That's what you want to look at. How long did it take to get up there? Because that's about the same time frame it's going to take to go back down. In other words, this move from 620 down to 500 could occur in a very short period of time. We look at the 10-day moving average. We're a touch oversold. We haven't sent that alert out to our subscribers yet, because we're at support and we're a little bit oversold. So we're going to wait and let the stock tell us what it's going to do. And from that point in time, we will make our adjustment. But if we break the 620 level, then we're going to adjust this to a put and trade that downside move and recover whatever loss there is, and likely make a nice gain, because that's a big move to the downside to still occur. Now, take a look at this chart. I've been talking about how I don't understand this one. I don't understand with the market getting weaker, interest rates going up, fuel costs going up. Campers, I mean, they're gas guzzlers, they're expensive, and they're luxury items. None of it makes sense to me. You're going to go out and finance something with interest rates starting to go back to the upside. You could argue with me that, okay, interest rates are going higher, but they're still historically low. Fair enough. But gas prices are not historically low. If you filled up your tank, you know that they're not historically low. These things take a lot of fuel. And yet here we are in a beautiful symmetrical triangle. We haven't broken significantly to the downside. Well, we've been in a strangle here. So we're good to go with this. If we break up or down, we're set. And regardless of what direction we go, and that is as an alert that we sent out to our subscribers as well. And so BOTZ, this was our entry, and it was a bit vertical. And here's why I don't like stuff that goes vertically to the upside. Look what happened. Vertically back down. We are at a level of support, so we can see how that plays out as far as what to do from here. But if it breaks 35, same scenario. We're all the way back down here. We're going to retrace the entire impulse move. That's how Elliott Wave works. And that's the beauty of it, is that you can have a pattern, and if the pattern fails, there's a plan. There's a contingency plan is what I was trying to say, of what happens next. It's not like you're left wondering, okay, what to do now. There's none of that. There's no indecision. If a pattern is set up and it fails, you know exactly what's going to happen next. And the really cool thing about Elliott Wave is when a pattern fails, what's supposed to happen next has a higher percentage chance of occurring than the original pattern. How many indicators are like that, to where you have your indicators and you're following along with them, and then it doesn't work, the trade breaks, and then what's supposed to happen next has a higher percentage chance? Elliott Wave is the only indicator that I'm aware of that is the scenario. So we do a lot of adjustments at Elliott Wave Options for that exact scenario, as far as the potential of something not going as it's supposed to initially. So here was CPLG. Now watch this. So the market's moving to the downside. This was an upward trade. Look at that. We continue to move to the upside. Now, I like 10% moves. We haven't quite gotten there yet, but a nice move to the upside. We'll watch the market itself. And if we get to the point where the market just really tanks to the downside, the majority of stocks follow the market. Since we've been moving lower but haven't really tanked lower, which is the scenario I love, is my favorite market scenario. We can still have stocks that are defying the trend and moving back to the upside. And this is a bullish trade that's profitable right now in the midst of the market moving to the downside. And we identified that back on September 14th. And then looking at Fizz, which we identified on the 21st of September. And we talked about how there are defensive sectors that when the market starts to weaken, money has to go somewhere. That money that moves into the markets every single month through IRAs, 401ks, any retirement plans, anybody that's doing a dollar cost averaging plan into a mutual fund, et cetera, that money has to move into the market by law, by securities law. The institutional managers can't say, oh man, I don't like the way the market looks right now, I'm just going to hold that in cash. Not allowed to do that. It has to go somewhere. So you find the areas that are moving to the upside. And this is Fizz, and check this out. Boom, another one that's moved higher in the face of the market moving to the downside. So here's two trades that we identified in TradeFinder moving up. These aren't even energy trades, moving to the upside while the market itself is moving lower. That's profitable as well. So, when do you want to take your profits? Usually I like to see a 10% move out of the stock. Neither one of them have quite hit the 10% move, but they're both profitable. And I think that you're like, all right, let's be really careful here and look and see if the market really starts to break to the downside, then maybe we want to go ahead and take those gains, even if the stock hasn't quite made the 10% move. So I think that makes a lot of sense. And then on 928, we identified this position here, and that's on info. So you look at 928, which is right there on that big move to the downside. We were a little bit oversold at that point in time. And so we've corrected that and just kind of trading a little bit to the upside. So this one is in a little bit of a losing spot. But why are we in this one? Because you had a wave 5 that ended below a 100% extension, which means that according to Elliott wave rules, the target price is all the way back down there at 100. There you go. There's the tractor beam effect again for Captain Kirk and Star Trek moving lower. And so if the market were to significantly break down, that goes down there. So it needs to break 115 because there was some support there, which it held. But if it breaks 115, look at the move to the upside from 100 to 115. It went straight up. So the break from 115 back down to 100 is going to be the same scenario. We wanted to be part of that. So we have to break 115 first. We haven't done it yet. But if we do, that's where we're going. And that's what we want to be involved in. Take a look at this one. So here is ENLC, another one fighting the trend. This was one in our momentum search that we have at Elliott Wave Options, where we're looking for stocks that are lower dollar. Basically, what we're trying to do is take the whole phenomenon of the meme stocks and all that kind of stuff with Wall Street bets and Robinhood and all that stuff, where their main MO is just looking for stocks that have a low dollar amount and a high short interest and trying to get those big jumps to the upside. They had them with GME and AMC, very few since then, but they made all the headlines. So what we're trying to do is present something for our subscribers where we can say, all right, now we can look for this, but let's put some solid technicals behind it. And look what happened here. We identified this back last week and watch. Boom, straight up since last week. Another one that's moved to the upside. Now that one's getting pretty close to where you're like, all right, you're starting to get greedy if you don't take the profits here, and tiny bit overbought maybe, but market down to the downside today. Not this one, moved higher. That was our last week's trade. That was our case study consideration for last week in TradeFinder, and it moved back to the upside. So look at that. That's 3 trades, none of them that are oil or natural gas in the energy sector that have defied the market and moved to the upside. And yet we still have our SPY puts doing well to the downside, the triple Q puts doing well to the downside. man, we're in a good spot with what the market is doing right now. As I said earlier, if you ever consider becoming a subscriber, now is the time. All right, so at this point in time, let's see if we can find a case study consideration that'll work as well as some of these others have. And we go to this button here, is scanners. By the way, if you're curious about this software, it's called Profit Source. I had a few people that asked me in the last SPY update, what is that software that you're using? It's called Profit Source, and you can find more information about it going to hub.com, HUBB.com. It's an Elliott Wave software program. I think it's the best Elliott Wave software program that exists. I'm a believer in Elliott Wave. Nobody's going to convince me differently. My viewpoint is anyone that thinks Elliott Wave doesn't work doesn't understand it. I've been trading it since 2001. That's 20 years. So nobody's going to tell me it doesn't work. But I can tell you a lot of people think they understand Elliott Wave and don't understand the intricacies of it. That's why we put so much education on our website for our subscribers. We want them to understand it. We want them to learn it and utilize it in their trading. But the software program is programmed to Ralph Nelson Elliott's exact mathematical algorithm. Some of the other Elliott Wave programs out there, there's a lot of them that exist, no doubt, but some are individuals' adaptations to Elliott Wave. And I'm kind of like, this guy was a math genius. He was regarded as a mathematical genius, and he wrote this. So I'm like, okay, he's a hell of a lot smarter than me. I'm going to follow along with what he says. I don't know what these other guys are doing that are creating their own adaptations of Elliott Wave. I'm going to follow along with what the guy that was a renowned math genius is doing. But that's your own personal preference. You can choose to go along with what you want. But the folks at Hub, because a lot of our Elliott Wave option subscribers got the software, I think possibly because I'm using it all the time, decided that, hey, we're going to create some tabs for you guys. And so if you're an Elliott Wave option alert subscriber and you have Profit Source, you have access to all of these tabs here. And these are pre-computed searches. So all you have to do is like go, boom, click on the button, and it brings the charts up. Well, there are no impulse results here to the upside, bullish impulse. Anyone that says EWO, those are all mine. Those are my personal searches that I created and I cultivated over time. But they also put a few other things in here like, hey, if you want to look at bullish wave 3s, why are those in there? Because we do things a little different in Elliott Wave options. A lot of Elliott Wave education says stay away from 1, 2, 3, and 4. Don't trade until you have a bounce off of a good fib level in wave 4 and trade that wave 5. But yet everybody agrees that wave 3 is the strongest, often the longest, but definitely the strongest of all the waves. And so my point is, why do we want to avoid that? Let's trade that. As long as we can find some sort of an impulse pattern, like a zigzag, something along those lines, then people come back. A zigzag is a corrective pattern. Yeah, it is, but it's also directional, and it can also be found in a wave 3. And when you find a good zigzag to the upside in a wave 3, that is gold. And we find a lot of them. So I'm not going to shy away from those just because, hey, you have a higher percentage if wave 1, 2, 3, and 4. Do you have a higher percentage if 1, 2, 3, and 4 are in play and you're trading the wave 5, which is the weakest? Or do you have a higher percentage of accuracy when you're trading the wave 3, which is the strongest, and you have a good pattern like a zigzag pattern within it? I argue that don't go away from the wave 3. So they put all these choices in here for you. So looking at that, nothing really to look at there. Nothing from the corrective side either. That's interesting. So that means that any of the wave 5s that may have finished and gone into a corrective pattern, they're either so far along or there's not enough of them to exist, but there's no results. So I always have to say, you know, there's that little tiny percentage chance that the market defies sentiment and moves back to the upside, but nothing there. But we do have 5 in the momentum search. We did this last week. Kind of hate to do that again, but the VIX is at almost 20. And, you know, when you start to look for triangles, we can maybe see if there's one. If we can't find one here, there's 80 stocks that are in consolidation. So we might be able to find a good triangle. Well, let's go ahead and look through these momentum ones and see if we can find another one like ENLC that we found last week that defies the market and rockets to the upside. Steel Connect, you know, I see the name steel in there. I don't know what they are. Redwood REIT, Real estate investment trusts, yeah, I don't like REITs, so I stay away from those. I almost never trade those because typically they don't move enough. But let's see what this looks like here. Oh man, it's a $2 stock. As I mentioned to you, this finds those low dollar stocks that are in vogue right now with the Robinhood guys. But let's find some that have some solid technicals behind them more than just a heavy short interest. I don't think that's enough. And I think a lot of people have gotten burned on that lately with just assuming that all those shorts are going to cover. I can tell you the retail traders are not strong enough, will never be strong enough to make institutional shorts cover. Not going to happen. Why have some of those worked? Because institutions came in with the retail traders and they helped push that. And that gave the retail traders a false sense of security. And that's exactly what they wanted. And then they reverse it and they move back to the downside. Happens every single day. Don't get caught up in that. Please don't get caught up in that. As tempting as it is, stay away from it. If you made money in it, congratulations, take it and run. But right here, we're at some resistance. We got to break above that 220 level. Not a whole lot of room to move from there. So it likely could break above that, but I don't know. Let's take a look at, this looks like a better chart. So there you have a zigzag in the wave 3. This is exactly what I was just talking about. So let's see if this is qualified. So there's your wave 3. There you go. I would have loved to have seen that make it to 38.2. Didn't quite make it. So Elliott would still view this as being within an impulse, but you got to respect that 61.8% level runs smack through the tap box, the time and price projection. A negative here is the ADX within the DMI is above the positive directional indicator. That's not what you want. And it's nearing 40, telling you that the strongest part of this move is over. It doesn't mean the whole move is over. The stock could easily go up there to 16 with this DMI, but I would feel better about it if the positive directional indicator was above the ADX, and it's not. Now the CCI looks great. That's our short-term indicator because the DMI is known as more of a lagging indicator. So the CCI we use to counteract that as far as being more responsive to the day-to-day movements in the markets. That looks golden. Came down almost to 0, back up to 100. So it's given pretty good support there. You take a look at volume. Yeah, pretty decent volume day yesterday. Backed off a little bit today, but that's understandable because we're right at this wave 3 high. So running into some resistance there. So let's look at the Chaikin money flow. That's negative. So not enough there to have confidence that we're going to break above that previous wave 3 high and move up there. So let's move on and see if there's anything else here. Another unit trust here, lithium, SLI. Yeah, I don't know anything about this stock. And happens often as far as I don't know a whole lot about these momentum stocks, these low dollar stocks, because they're a new world for me. But another one that's at tons of resistance, that's no good. Even though the DMI looks like you're going to break that, we would need it to do that before we consider it. So we're kind of running out of ideas here. Well, this looks better, but it's a $2 stock. Are there even options for this? I'm not sure. But man, that's the DMI you want there. The ADX hasn't made it to 20 yet. This goes on my watch list, but take a look at this. So if you're looking for something that could move higher, no idea what this is. Kind of scares me that a unit trust here could be like a REIT. But then we broke above this potential area of a wave 4, and then we broke above previous resistance there at 2. And we're climbing to the upside a bit in that 45-degree angle that I really like. So that looks good. The ADX has to get above 20 though before I enter. And we're hanging in a good area here, the threshold of the CCI. Look at that. Holy cow. You can't get a better looking CMF than that. Let's take that. Look at that. That's beautiful. As far as the CMF, that's exactly what you want. But man, we got to get that ADX above 20. Maybe that happens tomorrow. So that goes on my watch list. We can't say that that's our case study for this week because the ADX has to break 20. And you look at that and say, it's going to tomorrow. How many times? I mean, if you've been watching these for a while, you know, I've talked about this, that often you have this setup in the DMI and it looks like that ADX is going to break 20. It goes right up to it and then rolls over and fades down, and it never actually breaks it. It has to actually break it to give the signal. I'm already being a little bit aggressive with using 20 as my level on the DMI versus 25, which if you went out on the internet and read about the DMI, they talk about the ADX moving above 25, but we try to educate our subscribers on a trader's approach to these indicators and not just technicals and math, pure math. We're traders. And so you have to take some of those concepts into play. So I really like the ADX breaking above 20. That looks as great as it could look, but it has to break above 20. So that's on my watch list for tomorrow, but we can't do it today. So that kind of exhausts any of the momentum stuff. So let's take that off. Let's look at consolidating stocks. Let's see if there's anything in a bullish wave 3. Wow, surprise. I didn't think there would be. The financial 3 times ETF. Now you got to be careful on these. This is the FAS. It's a common one. So I know it's liquid. I know there's a lot of options on it. Again, the ADX is not there yet. So no break to the upside. But you don't expect that out of a consolidation pattern. What we have here is a large ascending triangle. So we want that ADX to be down below 13. It is actually below 13. So that's a consideration there. Now, the reason that I was kind of a little bit negative on the fact that it's one of those 3 times ETFs is the way they get that leverage is they bring futures contracts in. So they add futures contracts in. And so if you're trading options, you have time decay from the options and you have time decay from the futures. So you get a double whammy on time decay, which means you got to be right and you got to be right now. You don't have any time to be wrong or slow period of time for it to happen. It needs to go right now. So we would need this to break out in a very short period of time. Maybe it does. It's a pretty good ascending triangle. We got a lot of resistance there at 130. We have a pretty nice pattern of higher lows. That might be worth trading here. Interest rates moving higher, obviously that's good for financials. Can financials go higher and the market go lower? If financials go high enough, yeah, that could still happen. So this is pretty interesting to me as far as, let's see what the pricing of the options is here and see if this makes any sort of sense as far as whether or not we could put on a strangle here. But just in general terms, it looks pretty interesting. So FAS. And see what happens here. Try a different market. But trades on multiple markets. But primarily we'll see if there's information here on the MX. No options. All right, well, okay. That ends that scenario. Then let's look at IPG. Kind of just nothingness here. That's dead sideways. I don't really like that pattern. So let's go back and look at the consolidation pattern. Let's see if there's anything in a bearish wave 3. There almost never is. And why is that? Because when stocks move to the downside, they don't consolidate, right? When things move to the downside, they tend to move rather quickly. And so you almost never get a consolidation pattern in a bearish wave 3, but it never hurts to take a look at it just to see. So we'll take a look at some of these. I'm really surprised about FAS as far as not having options. There is options on FAS. So not on the Amex, but what's it trading on? What exchange is it trading on? The New York Stock Exchange. Okay, so that was my bad. I put it on the Amex. They didn't have options there, but they do on the New York Stock Exchange. And if you take a look, we could go out to, there's no December, so you got to go to January. And it's a bit expensive. So it's a little on the expensive side. So we have to break our 25 delta. So in order to make this work, you're going to have to go below a 20 delta to make that work. Now we do have a high value portfolio at LA Wave Options, and that's for those that are willing to take more than normally. We put $500 of risk into a position. So those that are willing to take more than that can access those trades. It's an add-on if you're interested. And so that wouldn't work for the majority of our subscribers. It would have to go in there. Let's see if we can find something else here that maybe is a little bit cheaper. Goldman Sachs, let's take a look at that. Another financial, so it's the same scenario. Well, it's expensive again. So we're gonna have that same problem, but man, that looks good. Look at the ADX diving lower. That's not what you would expect out of a financial, is it? When you think the potential, I mean, more of the ascending triangle like the FAS makes more sense. And Goldman Sachs has a trading desk, so pretty surprised that this is in a triangle, but that's another one that could be a good trade for the high value portfolio. I just think that these options are going to be way too expensive here on Goldman Sachs. So let's take a look at Goldman Sachs. But again, I feel like, yeah, it isn't going to work. Let's see if this one, I think this is on the New York Stock Exchange too. So all right, we'll take a look. And Goldman Sachs over here is, I really would like to have a December. Oh, we do have December. And looking for the 25 delta is way too expensive, off the charts expensive. So that's another high value one. So forget that. And then let's see if we can find something that maybe is a little more reasonably priced. We have done Texas Roadhouse in the past. That's been one that moved for us as a restaurant, which that's a little odd that it's consolidating, but that one could be one potential. You can see that had a pretty nice move in the past and is moved around. It does tend to move. That's something that you look for a triangle. So we'll make this one our case study consideration for this week with this symmetrical triangle and the potential of a, it's gone sideways for a while. So we have resistance up here in this area around 102. We have support down, man, that's a pretty good triangle at 88. So 14 points, you're looking for a 10% move. So it satisfies that with all those different ones that are there. Let's go ahead and take a look at that. Well, let me look at Textron real quick though, but I think Texas Roadhouse will be the one that we look at for this week. Yeah, this one doesn't have quite the movement, does it? I mean, the bottom is 66 to 74. It's 8. It's barely a 10% move. So let's do Texas Roadhouse as a strangle and see if that works. Again, it's another one that we've done from the past that's broken out. So we'll see about that. All right. So with a few minutes left to go ahead and take questions. Could look at BP asking over too late. You know, we're in, when that's oil, so we're already in the USO. Oh my goodness, yeah. Yikes, that's fairly vertical. It's in a wave 3. Now I don't know that we're too late. It's just that right now is still a touch over bought, so we corrected a little bit of that today. But as long as we stay above 28 here, we're good. I think there's a great chance it goes up and hits that wave 5 target. I don't think oil is done yet. I think we're very likely to see that $90 a barrel price and potentially 100. I think 90 is conservative, but it's a tiny bit overbought right now. But as long as it stays above 28, that's your stop if you wanted to go long. Might not hurt to see if we get a little more sideways consolidation for a day or two. You might not, but it's been vertical since 25 and maybe it needs to rest. Man, that's a good looking DMI though. Holy cow, that's really supportive. Nothing too alarming there. The CCI, and you're starting to get some confirmation here. The CMF, no positive money flow yet, but certainly moving in the right direction. And the CMF, you're looking for convergence or divergence. And so you're seeing some confirmation there. MGM, we'll take a look at that real quick. And I know there's a lot of people that are on the gambling stocks, looking at some of the other ones. And you can see a little bit with the CMF still on there, giving favor towards that. And gambling stocks are one of those defensive sectors. Alcohol, tobacco, and gambling are viewed as the 3 primary defensive sectors when the market begins to weaken. The viewpoint, right or wrong, whether you believe it or not, is that people, no matter what's going on in the economy, no matter what's going on in the market, are still going to find a way to drink, smoke, and gamble. Those are vices. And so those are areas where money tends to go, even when the rest of the market is not so strong. Massive move to the upside today. Big volume. I'm guessing that was an earnings report. I don't know, some sort of a news that came out on MGM. I know Las Vegas Sands has been one that a lot of people have talked about lately. Look at that triangle. Check that out. Asking if we're too late. Well, yeah, if you would have given us that one yesterday, holy cow, that would have been really good, wouldn't it? But the ADX wasn't down. There was it. So it didn't show up on our search because I need the ADX to be lower on the search. But this shows you that stocks can break out of triangles without even having low ADXs. We just use that as an added area of comfort and put the percentages a little bit more in our favor. But big move to the upside there. Now we're way overbought. And so we need to let that settle out. But when you have a move like that on such solid volume, it probably doesn't get erased. Maybe it comes back a little bit, lets the 10-day moving average catch up, and then you can find an entry to trade a little bit higher. But yeah, it'd be a tough one to do today. And so, well, we talked about Bitcoin earlier is a question. And so I really think that, and as you know, if you've been watching, Elliott Wave has been absolutely spot on. Bitcoin for the entire year. It's hard for me to see that we don't break and test the highs. Maybe we don't break the new highs, but I can't imagine that at this point we don't test new highs. The only thing that would change my mind is if Bitcoin broke below 52,000. As long as it stays above there, I think it's super bullish. And I do think we come up and test the recent highs. We'll have to see what our indicators show at that point in time as far as the likelihood of making new highs. I'm not calling that because you can certainly have a double top, but as long as we stay above 52,000, I think we got to be bullish on Bitcoin. And I know that goes against like, well, the market's not bullish, risk on, risk off, but hey, that's the way it is. LAC for James. We looked at this one before. We actually had traded this and nice breakout today. So perhaps we're ready to move again. On this stock, you can see that we had this big move. So we had traded it a couple of times. I think we were in that trade and then we were in this trade. I think we have at least 2 bullish trades on our trade register in LAC. And then it went through some consolidation, created its wave 4 and a triangle. That just doesn't get any better than that, does it? When you create a descending triangle in the wave 4, there you go. And people often incorrectly think that a descending triangle is implying a downside breakout. We showed that with Bitcoin. We're showing that here. That's not the way it works. And so now we're back up towards those highs again, which makes it interesting to look at. The ADX came below 20. Love that. It's got to curl back up above 20, get back above that negative directional indicator. You're starting to get some separation between the two directional indicators. So this one could be ready to run again, but I need one more day for me. But interesting because, yeah, we traded that one a couple times and now it looks ready to go again. And then open has been asked, OPEN. Open Door Technologies. This is booking restaurants. You're not familiar with it. So this is, oh, look at that DMI. Wow. That looks really good. So we got a break here. We're right at resistance. So we're right at resistance. This look at that double zigzag right there. Man, just classic. I missed that. Let me do it again. Gotta hit the low here. So we're already at, the only negative here is that we're at resistance and we're above 100%. The DMI is suggesting we go to 120 or 161.8. I think that's likely to happen as it runs right through the wave 5 in the tap box. Time and price projection as shown by the software profit source. Again, that's the Elliott wave algorithm. So I think, yeah, we're going to 26. I don't know if we go there without a pullback tomorrow. Let's look at the moving averages, tiny bit. Overbought at resistance. Maybe we need to rest a day or two, but that's another good call. That one looks like it wants to go higher. So really good on picking that one up. AFRM. We've looked at this one a couple times and had a really nice move and it's consolidating it. So if you're bullish on a stock, that's exactly what you want to see happen after you get a vertical move like we had back there on the 6th. You don't want it to give up a whole lot of it. It has to close that gap with the 10-day moving average. So you prefer it to do it through a sideways consolidation, which it has. And look here. So this is an easy one, right? 140 is the key. So if it can break above that, yeah, I think it goes to 170 easy. And if you get to 170, you're going to get that tractor beam to bring it all the way up to 200, likely, I think. But we got to get above 140 first. So the ADX is trading around 40. The biggest negative here is that the positive directional indicator is moving lower, but that's not too worrisome because the stock is consolidating that big move. So that's to be expected. The positive here is that the negative ADX hasn't really shown a whole lot of selling pressure, just a tiny bit today come in, but you got to get above 140. So if you get above 140, you're off and running again, but until it does, just be a little bit cautious of that. If it breaks back below 140, you have to respect that it may come test 120. And if it comes down there, it could create the wave 4. But as long as it stays above 140, you're bullish and could be looking at significant more move to the upside. Georgian Iron Condor and IWM, we had talked about that last week, I think, and it turned out good. Congratulations. Yeah, you know, I just talked about that, about how long the IWM has been sideways, and it's so hard for me to do a butterfly or an iron condor on something that's been going sideways for now 10 months. George, were you talking about doing the weeklies? Because we had that conversation about doing weeklies. Did you do weeklies or monthlies? But I'm happy that it turned out well for you. I just, with that triangle in between all that support and resistance, for me, I just have to back away, but I'm really happy that you had a profitable trade. Good job. So Scott, we've talked about Bitcoin already. USO we've covered. Mark, is that a symbol? Is this a symbol? Yeah, I'm not sure what you're asking, Mark, please. I don't know what that means. Forgive me for my ignorance. Rick wants to look at Boeing, a possible strangle. So well, we having issues here on Boeing. where are you, boy? There we go. So looking at, the issue here is that you got a $225 stock and it just hasn't moved a whole lot for the entire year. It did get up a little bit in early March, so that would be helpful if we could have another move like that. But if the economy weakens, is that going to be, the ADX is diving down, and you got to be careful about getting too fundamental on these triangles because the pattern is the pattern, but it's just not the most beautiful triangle for me. And I just feel like as low as that ADX is, we could get a movement, we could get a breakout, but is it going to be enough? Maybe, but for me, I think I would have to pass on that one. But I certainly understand why you're looking for it. Let's look at Spotify. Now this one I like a little bit better. You can see how the ADX is diving straight down, and Spotify can move. Look at that. So there's a little more history here of movement. You got a bit of a zigzag there inside the triangle. So you got a couple corrective patterns working here. I like this one a lot better. Nice dive down in that ADX, as I noted, and probably a little more expensive. I'd imagine that with the movement in the past here with that triangle being over a $220 stock, probably one that would wind up in the high value, but I like that one. So Rick, I think between the two, I'd much prefer that one. So Gunther is asking for DQ. Energy, so yeah, it's hard to not be bullish on this. Couple really super nice days there. Recovering previous wave 5 to the downside. So what happens there? It went right to the fib level on the wave 5. So your target is likely all the way back up, and that's a good one, Gunther. Good call there. Let's get that ADX back above 20 though, before I'd be comfortable as saying, yeah, full on go. We got a little bit of resistance here at 70. So maybe if we come up here to resistance at 70, we get that ADX to continue up, but there's no better separation between the two directional indicators than what you have there. So if we could get little consolidation here at 70, let that ADX get above 20, then I think you got a great trade from 70 to 90 there. That's exactly what should happen in that one, and it's in the right sector. So really good call there. LC, Lending Club. So yeah, anything financial has got to be something that you take a look at, but up near resistance here. So we would want to see it get above that. And I think the only calling or the issue here with these financials, we've noticed this a few times now, is that they're at some resistance, and you think with higher interest rates they're going to break through it, and maybe they do, but if the market completely breaks down, it could bring the financials down with them, even with interest rates going higher. I know that doesn't make sense, but it could happen. The ADX has to get above 20. Looks like it might, but let's get above this wave 3 target here at 32 and get that ADX above 20, and then that one could run too. But between those two, I would do DQ first and give LC a day or two, but really good calls on this. Couldn't it be possible that the S&P is starting a bullish zigzag? Mike says, so where would your A impulse be here? I'm guessing that you're talking, the only thing I can see, and this may be what you're talking about, is here, that you're coming from this low, and that's your A impulse, and a B correction there, and potentially a C wave extension up there. That's possible, and we gapped up. I would like to see a better finish to an A wave impulse, but it is qualified. So you're right there as far as it being a qualified pattern, with the B coming down right towards the 61.8% level. Yeah, I mean, you're right. And as far as that being a qualified pattern, as far as the potential move to the upside, I don't know that it's structured the best with a gap and then closing on a low there at the end of an impulse, but you got to start a correction at some point in time. I guess we'll find out which of these is going to hold. There's 2 downward zigzags, and This one is qualified higher. It doesn't get us back to the previous high though, unless we go to 161.8% extension, but it's worth watching. I mean, that's a good call, Mike. We'll have to wait and see. Cano Health, Robert, I don't know that symbol. Is that CANO? Is that the symbol for it? Yeah, okay. So I do know it. Down at an awful lot of support here at 11. It's another one of those, stocks that are looking for some sort of a big turnaround. Is this cannabis or is this something else? But now we have a trading range, right? 11 to 15. So we could turn around and go right back to the upside there. Terrible looking DMI, CCI. Yeah, finding an awful lot of support at a lower threshold, which is looking like it does want to try to bounce here from this support. So perhaps we bounce from 11 back higher. I mean, that is a distinct possibility. So see how that plays out. I think there's better charts that you could trade as far as upward moves here. But if it holds there, if it breaks there, you still have another bastion of support there at 10. If it gives up 10, you got to get out. But you could put this on and say, okay, I'm in at 11. I'm willing to give it to 10, but if it breaks 10, I'm out. If you did that, I think I could be supportive of that. There's a good question about covering the Shanghai. We'll start doing that with everything that's going on. So we'll finish up here with a couple more. So PODY. What market is that on? PODY. Is that the NASDAQ?
Rob, I think that's actually a typo, and so TNX is the chart.
Okay. I thought there was two there, so my bad. All right, TMX.
NX, and
that's pretty ugly on that move down there. And then it consolidated and it broke down again. So are you looking for a bearish trade? Are we talking about potential recovery? Because we're in a bit of no man's land right here. Down around 26 is where the next level of support is. So if you're looking for something to the downside, we're moving back towards zero. You can't count that until it gets to, if it gets to positive 100, then maybe you look at that one a little bit differently. The 10 is across the 30. I mean, I don't see anything bullish about this stock at all. It looks like a good short to me at this point in time. And, we've got a nice downward zigzag there too. So you put that into the mix. And well, the 61.8% level is the target, and that's basically where we are. So we would need to see a break of that, and then it goes down to 34. But I think that's highly likely. That's about as ugly as it gets. We'll do APPS. We'll do Tesla Thursday night. And I know that we've been kind of talking about this digital turbine here lately, and really good day today on this stock. And this is the point where we had to break above, right? I think we talked about this, was it Thursday night or was it all the way to last week that we needed to break above 80, and it did today. And so we've got a little bit of resistance here at 90, but I don't think that holds it. We got turned back at 100 last time. There's that, round number thing, the tractor beam effect that pulls back to the target. I think we're going to go test it again. It looks like it. The ADX is at 35, plenty of room there. The positive directional indicator turned back to the upside. That one looks pretty good as far as a continued move higher from here. AMN, take a look at that. Another one with multiple markets. And these stocks never used to do this. They never used to switch exchanges. You picked an exchange and you stayed there. Well, that certainly looks a whole lot better than that Kano Health, doesn't it? I mean, nice zigzag right there. So you can see the consolidation here, triangle right there, everything in this pattern. Is it in an Elliott pattern too? Yeah, it is. It's in a wave 3. Well, that makes sense. Well, here's a good example of why don't we trade the wave 3? Everything is in here. You got a zigzag, you got a triangle, you got a strong wave 3 to the upside, you got a super well-formed DMI. That one's going to go higher. I don't know what this company does as far as the health industry, but I think we're going to go up to that extension level at 130. Then we'll have to take another look at it, but looks like more to go to the upsides, or at 122, so not a whole lot more, but up near 130, I think happens. But that is, yeah, that's why we look at wave 3s. That's the epitome of it right there. And you've got a perfect, there's the ADX crossing above 25. So even the more conservative people would like that. That looks awesome. That's a really good call. All right. So it went to an hour and 15 minutes. That's much longer than we expect to do these things. I always sign off with this, that I really appreciate your time. Time is the most valuable thing that we all have, and we appreciate you spending it with us. Hopefully you found this informational and informative. Love to have you as an alert subscriber. Things are going really well this time. We got some cool new stuff coming out. We got a great new strategy that's coming out in a couple weeks. So no better time to join us than now. But thanks for your attention. Have a wonderful week. Look forward to talking again next week.